Good morning, everybody. Thanks for joining us today. We're going to have a good webinar. I think is going to have some very valuable information for you business owners and executives of your companies. We are fortunate today to have Dave Eisenberg. He is a certified lease and finance professional and channel training coordinator with Great American Financial Services. And he will be presenting some information on the IRS Section 179 deduction that you can take advantage of at the end of the year here to help you reduce your taxes. And my name is George Pasadakis. I'm the Director of Sales and Marketing at Apex Technology Management. Lots of you on the call are our clients, and others may have some interest in using this deduction to help purchase some technology that you might need now or early next year. Without any further hesitation, I'm going to just jump right in, talk about a couple of quick things about Apex. As I mentioned, we're a managed IT services provider. We've been in business for over 25 years. We're headquartered here in Redding, California, but we've got clients and do business throughout the state. We've got an office down in Fresno and Salinas in Central California as well. Our team has lots of certifications with all the vendors you see on the slide there, over 85 certifications, which basically means if you hire us as your IT department, we keep our technology current with all of our technicians, keep them trained on the latest things that are coming out that can help keep your business safe, secure, and stable, and really deliver on our mission there that you can see, which is transforming organizations and lives through innovative technology solutions. We don't want to just take care of the day-to-day support that we do. We want to make sure we are delivering solutions that enable your business to do new things, let you focus on why you started the business, not just getting IT taken care of. Some of the ways that we can help: IT managed services. So in some cases, we have clients that have no IT staff at all. We are their IT department, and we provide 24/7 monitoring and patching and support. We want to make sure we keep all of your technology up to date to keep you safe and secure. As you know, lots of recent threats in the news, and the vendors are fixing and closing those holes, but you have to apply their patches across all the devices in your organization. So we help you do that. We take care of keeping all of your local and wide area network infrastructure running smoothly and performing well, so your team can actually focus on doing their job and getting the business done, not waiting on the technology. And we also have what's we call virtual CIO services. So if we are handling the IT for you, you have what we call a virtual CIO, Chief Information Officer, and they are there to make sure the rest of the team is delivering services effectively, and that we're partnering with you at a business level and understanding where you're going, what's coming up, any challenges that you face, and how can we bring technology to the table to let you innovate, to let you compete more effectively, keep your costs down, and run as efficiently as possible. We have a full-time end-user support help desk here in California. It takes an average of 17 seconds when a client calls in for them to be talking to a technician. These guys are here on the help desk full-time. They don't go out into the field. We have another team that does that. So when we get busy on projects out in the field, we're not leaving you empty-handed. We always have people here to take the calls. We have a full-time scheduling coordinator that will assess the call and make sure we connect you with the right technician to get that particular task done effectively, and our goal is to resolve it on the first call. We also have a full professional services team that can do projects and consulting. We have what we call a TAP, Technology Assessment Profile, where if you're wondering where your company stands from an IT perspective, how is your security, how's that looking? We can do an IT assessment and compare where you are currently to IT industry best practices, and then kind of rank where you need to be, where you need to go, and prioritize future work, make it into a strategic IT plan so you can make sure you're handling things at the level that you need to. And of course, we also have lots of cloud hosting options for clients where that makes sense, and save them on some infrastructure cost over time, and allow full productivity from mobile sales forces and teams that are dispersed around. Next slide, Dave. There you go, Dave.
Thanks, George. I want to start out that I'm not a CPA, but I am a certified lease and finance professional. And as we'll kind of go through this, you don't have to be an expert to have a basic understanding of Section 179. Now, I want to start off by saying that we're going to play that old game, good news, bad news. And the bad news first. Today, we're going to talk about Section 179 tax benefit. We're going to talk about depreciation and math in general. The good news is you're going to learn about a great way to lessen your tax burden and utilize advancements in technology as a competitive advantage. If this is any way intimidating, let me put your fears at ease. I picked up my fancy book learned in Kentucky, so if I could get this, you definitely got it. Like everything in life, if you break it down to fundamentals, it becomes quite simple. So here is the technical description of depreciation. I'm not going to read this to you, but everyday translation, depreciation can be listed as an expense on a tax return and is used to reduce taxable income. Basically, in layman's terms, if you have less to tax, you pay less taxes. So the big indicator of who gets the depreciation. Well, from a tax perspective, the entity viewed as the owner of the equipment gets the benefits of ownership, which is depreciation. So if you pay cash for the equipment, you are viewed as the owner of the equipment. You get the depreciation. If you lease it on a dollar buyout purchase option lease, you are viewed as the owner of the equipment. You get the benefits of ownership, which is depreciation. So I want to be very clear here. If you pay cash for it or you do it on a dollar buyout lease, you are viewed as the owner of the equipment. You get benefits of ownership, which is depreciation. So let's be clear. What doesn't qualify for depreciation is a fair market value lease or a rental agreement because, again, you are not viewed as the owner of the equipment. What does qualify for depreciation is a cash sale or a dollar buyout lease. George, can you give us a little color on what equipment is eligible for Section 179?
Yes, absolutely. One thing real quick, if people have questions that are on the call, there's a Q&A box. You can type in the questions. We have everybody on mute right now, and we will address the questions at the end. So, if you are a typical small and medium business, you have lots of different types of equipment that you're running now. If you need upgrades, if you need expansion, if you're considering replacing old technology, these are some of the examples of things that would definitely qualify. So routers and firewalls, these are the gateway devices that are the first line of protection between your business internal information and the internet. If you've got a router that's more than 2 or 3 years old, you definitely want to look at upgrading it. There's a whole new category of these called next-gen firewalls that have been designed to protect you against the latest threats that are out there right now. So if you have something that's fairly old, you definitely want to look at upgrading that. Switches, there's faster switches have come out perhaps. What you have, these are the devices that connect all of the workstations and servers and other things, medical devices, cameras to your network. Those are good categories to look at. Wireless, is getting more and more important. More and more devices in your business are using and relying on a wireless connection. So if you need to look at that and put in something perhaps that allows your device to roam across your facility or between buildings and not lose a connection, this is a great time to look at that. One of the interesting categories is software. You can take advantage of Section 179 for off-the-shelf software. And what I mean by that is software that is not customized to your business. If you can just go buy it and deploy it without customization, that would count. Microsoft Office, if you buy the boxed or downloadable version of Microsoft Office, that counts. If you're buying QuickBooks or some other financial accounting software, that qualifies. If you hire somebody to do a custom software program for you, that does not. So it needs to be readily available off-the-shelf software. If you have questions on whether an application you're looking at qualifies for that or not, definitely reach out to us. Servers, at Apex, we recommend replacing your servers that are a key component of running your business every 5 years. So if you have some servers that are aging or are on server 2008, an older operating system, you need to start budgeting to replace those. This might be a good time to take advantage of that. Phone systems, voice over IP phones, traditional phones, of course, would qualify for that as well. There's lots of new capabilities on the newer systems. Backup and disaster recovery. If you definitely need to be backing up your data as it's growing, and lots of the current malware threats like ransomware would require you to restore from a good copy of backup data. So you want to take a look at that. Do you have a good backup and disaster recovery system in place that's going to support your business if there's a natural disaster, or the likelihood of having a ransomware attack affect your business? Workstations and monitors. Lots of organizations are still running on Windows 7. Windows 10 has been out for over a year now. Lots of great features and productivity improvements, as well as security enhancements have been made to Windows 10. Might be a good time to take advantage of that. If you need new workstations, that would definitely qualify for the Section 179 deduction. Dual monitors. A lot of people don't think about that, but it's our clients that have taken the recommendation and putting in dual monitors for most of their staff see huge productivity jumps. You're not constantly flipping between windows. I think today the average worker runs 3 to 4 applications all day long, and changing between them can affect the productivity. So it may be simple adding a second monitor for your key staff. Definitely Section 179 eligible. Laptops, Ultrabooks, lots of new technology has been coming out. There's some really great solutions with 2-in-1s, Microsoft Surface devices. They give you long battery life, very powerful and easy to use experiences, lightweight. Scanners, especially in businesses that have a lot of paper coming in, there's some really great scanners, sheet-fed scanners. You could load 30 sheets in there, and some of them can be ragged, and they just run right through these things and scan that into your network. Battery backups, for key workstations and servers, you definitely want to have battery backups in place to ride out small power failures without losing and corrupting your data. And then lastly, storage. Most of our clients are requiring more and more storage as time goes by. You're doing more things with your computer, more things with your network, storing more information. Digital picture files and CAD files and that type of thing are growing larger and larger as the resolutions get higher and higher. So you may want to look at your storage, have your IT provider take a look at that. If you think you might need to expand for the next year or two, this might be a really good time to do it and take that deduction with it. Other equipment outside of IT equipment would also qualify: copiers, printers, those kind of things. I think even vehicles, but again, as Dave said, we want you to rely on your accountant or CPA if you have any questions about that. But there are lots of other things for your business that you can take advantage of the Section 179 deduction.
And the deduction and everything is about lessening your tax burden surrounding taxable income. And taxable income is generally described as gross income or adjusted gross income minus any deductions or exemptions allowed in that tax year. An example of a deduction or exemption is depreciation. So what exactly is Section 179? Well, simply put, instead of depreciating an asset over a 5-year period, Section 179 allows you to accelerate all the depreciation, the full amount of the asset, up to $500,000 into year 1. There are limitations associated with Section 179. And the aggregate cap of the Section 179 deduction is $500,000. After that, you get 50% bonus depreciation, and it is generally taken after the $500,000 in Section 179 spending cap is reached. The deduction cannot reduce taxable income if you have no taxable income. There's other applicable limitations that you can that are not major limitations. You should definitely consult your tax advisor to confirm how you may benefit from this tax break. So brace yourself. This is a point of the program where I'm going to show you how the sausage is made. So a traditional Makers method, and Makers is the modified accelerated cost recovery system. And Makers is a depreciation method that is used only for income tax purposes and is for the equipment George went over in the earlier slide. The 5-year Makers method is used. Now, why 6 years on a 5-year method? Well, the first year is on a half-year convention. It's on a declining scale. So in an example, you have gross income of $100,000. You lease on a dollar buyout a phone system or other technology valued at $100,000 with install costs and everything associated. The maker's method of depreciation allows you to depreciate 20% in the first year. And here's that table. And again, it's on 6 years because it's on a half-year convention on the first year. So if we take that $100,000 times the 20% depreciation, you get $20,000. So you take your $100,000 gross income, back out $20,000 of depreciation, and you now have taxable income of $80,000. And you will pay tax on that $80,000 of gross taxable income. Now let's look how impactful Section 179 really is. That same $100,000 of gross income and that same dollar buyout technology valued at $100,000, well, Section 179 allows you to accelerate all the depreciation up to $500,000 in year one based on all fixed asset purchases in that tax year. So that $100,000 gross income, and now you can accelerate all the depreciation in year one of that $100,000 system, and it allows you to have $0 in taxable income. That is a significant and impactful deduction and economic stimulus that you need to take advantage of in regards to whether you want to buy equipment and lessen your tax burden. So the bonus depreciation. If we look at it, the customer bought, if you bought a total of $2 million, you bought a $100,000 phone system, you bought a new computer system, you bought a bulldozer or whatever it would be, that all qualifying under Section 179, and it totaled $2 million in qualifying fixed assets. Well, that first $500,000 of the $2 million is going to be, all of it is going to be accelerated depreciation. Then what kicks in is your bonus depreciation allows you to depreciate the remaining $1.5 million at 50%, which would be $750,000. After that, this is the kicker, after you do the Section 179, then the bonus depreciation associated with it, then the remaining $750,000 that you didn't depreciate, you still get to take the 20% first year maker's depreciation on that. That is extremely significant and impactful to understand. So if we look at it, I've got to see the numbers in it to kind of see how it works out. So $2 million in fixed asset purchases that qualify under Section 179 for that tax year. The first $500,000, you're going to write off all of it. You max that out. Then the remaining $1.5 million, you depreciate 50% of that, so you depreciate $750,000. Now the remaining $750,000, you depreciate 20% of that, so you have an additional $150,000. Totaling all of your depreciation under Section 179 on those $2 million in equipment purchases to $1.4 million in depreciation deductions out of your taxable income. That is a significant advantage. And you know, more and more I learn about taxes and businesses in general, to be honest with you guys, is there's two ways to really make money. There's one is selling a good or service more than it costs to make it. And number two is lessening your tax burden. You really have to pay attention to this. Partnering with your CPA, having great understanding of all the tax implications. And what part of that is this Section 179. It's huge. If you buy $2 million in equipment purchases in the tax year, you can depreciate $1.4 million. That is very significant. Now, guys, we made it through the section, and it wasn't really that bad. So I just want you to get out of this that if you want to capitalize the asset to reduce your tax liability, you now have Section 179 in your tool belt. If you want to acquire new technology and reduce your tax liability, this is the best time of year to do it because you can really gauge how much you can really forecast out with 2 months left how much taxable income you're actually going to have.
So with that, we are going to have this recorded and posted to our website at Apex and our YouTube page. So we'll send out a link to all the attendees of that. If you came on late or you want to share this information with somebody in your organization, we will make that available. And if there are any follow-on questions, the best way to reach us would be calling Apex at our phone number 530-248-1000, or reaching out to us at info@apex.com, or of course going to our website apex.com and hitting the contact us button there. And if we have any follow-on questions that I want to get in front of Dave, I can connect you up with Dave directly, and he can answer those types of questions. So without further ado, let's go ahead and wrap up the call. Thanks for everybody joining us today, and hopefully you've had some valuable information come your way that can help you guys out closing out the year. Thank you.